Alright guys, starting this live stream here. Usually a few minutes before people show up, so if you're watching this after the fact, welcome. Thank you very much for watching. Stock market in a pretty good place right now. We got, new highs, or near new highs. S&P 500, let's take a look. Sitting there right near these prior highs. NASDAQ, same thing. Near recent highs. Very recent highs. Only a few closing candles higher than where we are right now, so that's a good thing. Got the market leaders holding up really well. Nothing too negative in the marketplace, and so we're basically looking to take long positions at this moment in time. And that's about that. So we lately have been doing the pre-market movers. This is earnings season in the stock market, and that leads you to trying to find what's moving, what's going to be moving, what's not going to be moving, and kind of looking for the best setups and trading accordingly, as we all should do. You should always be looking for the best setups and trading accordingly. You shouldn't be looking to catch bottoms. You shouldn't be looking to, just look for the best setups. Shutterstock is a very good setup I like right here. Talked about several different stocks recently, added them to my watch list, and this is my overall watch list up here. ABBV is another one I've been watching. Has a very aggressive downward sloping trend line with a form of a double bottom down here. Hopefully it can get going. Looks like we broke in the trend line. All right, so 200-day moving average is this one that's highlighted in blue here. Coming up to that, probably will get more aggressive as we get above that in ABBV. Shutterstock, another one that's a little down and trodden. I know I say don't buy stocks that are down, but you have to know what to look for, and that's important. This is Shutterstock is a good one. Also, some very very high tight bases have been few and far between in the markets here lately. Trying to find those has really been like trying to pick a needle in a haystack. One that's actually worked for me quite well in the past is Boeing. I put a buy on Boeing right here. One of the best trades I've done last year was a buy over this little small base right here. Although if you look at the gap up, it wasn't very small, but the subsequent movement was very nice and tight, and moving higher slowly after that, kind of moving, and then now forming in a much larger base. This is kind of a malformed base. There's nothing really normal about this base. It's not bad. It's not bad, but it's not really being telegraphed as well as others. So could you be at a low risk entry point? Actually, even today, yeah, you could be. This could be a low risk entry point, but when you take low risk entry points, in a lot of cases, you run a high risk of them being stopped out. So if you do these, it's a smaller position entry, and you're basically just looking to get a little bit of a turbocharge on some gains if we tend to break to the upside. So Boeing right here, not looking too bad. It is a low risk entry, but like I said, a high probability of it being moved. Now this is the 200-day moving average in Boeing, and I'm not sure when the last time we actually crossed the 200-day is. So let's take this out. So there's the 200-day. Haven't actually crossed the 200-day since another one of these really long trend lines. Right there. You can see right there this is called moving average expansion, where you have all the three moving averages basically moving away from each other in the same direction. All right, now we have a little cup with handle here, little base here, and now we have a big base up here indicating distribution, and we'll see if it ends up leading to much lower prices. But very beautiful choreographed base in Boeing, and a lot of stocks look like this right now. They look very extended. They don't look very well formed up here. Okay, doesn't mean that we can't go back and have some more gains throughout the rest of the year. It's fully possible, and in a lot of stocks I do anticipate that. Not sure if Boeing's one of them. It's almost tripled from 140 up to 370. So I think $420 would be 300%. So we've almost gotten there. I don't know the exact percentage gain there. I guess I could do that real quick, but it's been a tremendous run, 170%. If you look for these basically really well formed long-term bases, this is really what I want to find right here. exactly like this. Very long-term, well-formed bases that just move, like this. Now we're long in a bear market, so it's very difficult to find these, and my trading has actually suffered a little bit because of it. Few boredom trades, things like that, things that aren't really healthy action to do for an investor or a trader. So I'm getting back to that. Going to be taking much less positions, holding in my basic default strategy, which is long the Nasdaq. Never mad being long the Nasdaq. The Nasdaq actually has had a pretty good year. Up, looks like only 4%. Not too bad. Not too bad for halfway through the year. So, historical average, you're looking at between 7 and 10%, give or take. So, pretty much right in line with historical averages. And last year, the Nasdaq actually only did about 2%. Oh, this wasn't a year. I'm sorry. These are these are futures expiration dates. No wonder. I'm like, something doesn't seem right here. So there we go. Nasdaq this quarter's done 2%. Here's Nasdaq for the year. That makes more sense. 16%. There you go. So doing better than historical average. So you can't be mad at that from an investment standpoint. If you're going to get 16% per year out of your investment, you can't be mad at that. And so the Nasdaq is kind of my default when I can't find too many good options. And about 2/3 of my account has been in the Nasdaq ever since right about here. Ever since we broke this 50-day moving average, I've had about 2/3 of my account in the Nasdaq, and actually in a different instrument called the TQQQ, which is triple the Nasdaq, right there, and we're up 17% since this particular point. So, gotta trade smart. Okay, so NQ being the actual Nasdaq future, E-mini Nasdaq 100 index futures. This is really what you're looking for. This basically trades almost 24/7, not exactly 24/7, but almost. Two very interesting little candles here. Let's take a peek at these. This could almost be called railroad tracks, which would not be a good thing. Volume is about the same, close is about the same, high and low, almost about the same. So we'll see what happens in the next rest of the week, I guess. Today being Tuesday. Yep, Tuesday. We'll see what happens through the rest of the week. Above the 50 days healthy, around the 10 days. So far, we're respecting the 10 days healthy. This is going to have to push us higher, or we're going to do another one of these where we come back and test the 50-day. So we'll see if we get pushed higher or pushed lower. But we came out of this chop alive, and that's pretty good. And I was actually going back quite some time and trying to look at the Nasdaq and how it's been behaving for the past while. We had this base back here in 2015. So here we go, this big base back here in 2015. Man, look at all this volume. Volume's picked up here recently. Definitely a little bit of distribution up here. But I was looking at the behavior, and pretty much what you've seen is you see some high volume sell-offs here to the downside, and what you see is low volume upswings and higher volume downswings. It's kind of been the normal on the way up. That's very interesting behavior. You think that would be abnormal, but apparently that's fairly normal for the NQ. So taking that into perspective, you can see here most of these green areas are lower volume and do run up. Here's a run up on lower volume right here. So this is the 2015 bear market right here. Not even a bear market, little correction. And then you begin the uptrend again, and you can see the higher volume to the downside, the capitulation move with a lot of accumulation. This really fueled, I think, a lot of this low volume right here. If you chop up this into little slices, you're going to fill up a lot of these areas in terms of volume. But obviously that never happens. They got in at the low point. That's why this was so aggressive. And then you have here, which is another pretty good rally here on very low volume. So, trying to know when to take volume into account. This is an index. Keep in mind, this isn't an individual stock. So it's going to have to be taken a little differently. And here's another example of a high volume low being bought with a lower volume rally behind it. Okay, this is the smart money buying a ton at the bottom down here, causing a bottom. And this much volume is usually going to cause at least a short-term bottom. You can see the general rally out of most of these moves. So this low was never undercut. You notice that? Never undercut. Pretty interesting. A few high volume sell candles in here, some distribution, then continuing. And then you see a bit of a trend line right here for, it's like about a month or two. August, so about a month. And spikes of increased selling volume doesn't lead to anything. Again, this is an index. This is not a individual stock. And so you see, these high volume spikes and then a low volume run up. Look at that big run up, high volume down, low volume run up, and this continues. So these high volume sell days are not abnormal. I'm not really being scared off by these, to be honest with you. Not scared off at all. And then you're looking at some of the market leaders. They've been holding up really well. Facebook, even after its big sell-off, so far hasn't participated further to the downside. Obviously it can, and it probably still will. Same with Twitter. These are two of the ones that really sold off. We also had Netflix. Take it on the chin a little bit there. And you can see Netflix has rolled over since its huge reversal day. One of the very, very big reversal day. But subsequently rolling over and rolling over again and looking like it's trying to roll over again. So, a little bit of lackluster leadership in some of these names, but then you have other names that are holding up, such as Apple. Apple holding up very well. Amazon, the less speculative, like Apple and Amazon, you can't question those. Netflix, you can always question subscribership. You can question all kinds of things. You can't question Amazon too much. Can't question Apple too much. Google, kind of hard to question Google, right? Google's going to be here. It's not going anywhere. Netflix, maybe something happens. I don't know. But Amazon, Apple, Google, can't question them. Can't question them at all. And so that's what we have here, guys. We have a market where, for those of you just joining me, I've been kind of going on a rant for the people that are here later. It takes a while for these streams to get going. I have a less active subscribership count on this channel, so I was just kind of recapping the general sentiment of the market right here. The fact that the Nasdaq and using these futures as a proxy for the Nasdaq typically has rallied on lower volume, typically has kind of sold off on higher volume, and had very high volume spikes at the bottoms, which is to be expected, especially from a futures account where usually massive institutional players play. This is where you can see a lot of the institutional money coming in. Also recapping the fact that most of the leaders in the market were about 30% of them have sold off, the rest of them have maintained and have made new highs. Like you just heard me say, Apple, Google doing pretty good, Netflix doing pretty good, Microsoft, haven't looked at Microsoft in a while, doing very well. Microsoft doing very well. Volume is higher or a little bit lower. I get it. We're pretty deep into a bull run, and so you have to give the market kind of its due. And I do have chat open, guys. It's just not over here today. Usually a little less active, so it's in front of my other screen. If you guys do chat, I will see it. But just want to give full screen with this particular platform. So yeah, are we a little late in the bull market? Maybe it's a little late. Maybe it's one of the latter stages of a bull market. Now keep in mind the market is typically slow during the summertime and picks up in October. All right, a lot of people taking vacations. That has historically kind of been a thing, but this hasn't been a really slow summer. It's been a little choppier than the past couple of years, but we haven't really sold off. Sell in May, go away was something that was said based off of traders literally physically leaving the physical trading floor back when there was a physical trading floor. Now it's all virtual, so you can trade globally. You can trade on your yacht, and many of them do, but some of them do still take vacations. All right, doesn't mean there's people not trading in their place. That's why I think the summers have not necessarily been that bad. So here was summer last year. Looked like a normal market activity to me. Same thing back here with 2016. Summer, you got June, July, August, September, October. If you notice, October was fairly flat in 2016 and ran during the summertime. So sell in May, go away hasn't been very successful the past several years, but This year, more of the same. This year, more of the same. It's been kind of a mixed bag. Here's May, big rally into May. June and July have been a little choppy. Who's to say what's going to happen for September? October, November, December. And you're just watching the names and seeing what's going on, and staying apprised of the market updates and understanding kind of the macroeconomics going on. Which right now there is a little bit of headwinds in terms of macroeconomics. You've got the dollar being very strong here, which can hurt exports, can hurt companies that are that have a lot of sales overseas, and so that can do a lot of that can cause some damage. Kronos beats earnings. Okay. I almost took a defensive position in earnings. What did Kronos do here? Let's look at after hours. Not up that much. 5.96. Not much at all. So yeah, barely flat for Kronos, even though it beat earnings. And I'm looking at Investors Business Daily as normal, and it is. I'm going to pull chat over here in case anyone actually feels like chatting. So, there you go, guys. Kind of. All right, leading cloud computing Workday. Ooh, that's a very nice little flat base. Yeah, Daniel, it's up, buddy. 22%, a little deep for a flat base, but getting support of the 200-day moving average here. Workday not doing bad things. It's been working, buddy. So actually, market's gonna open. I didn't get water this morning. I'll be right back. I'm gonna grab some water. All right, water is good. Man, should be outside riding a bike with my son. I need to go buy a bike today. He's learned to ride his bike now, so I rode on my other little son's bike and broke the seat yesterday. Haven't had to buy a bike for a long time. Yeah, Workday, very good. Workday's very good. Looks like a lot of good mutual funds. Netflix uses them. TripAdvisor uses them. In June, Workday announced it will acquire Adaptive Insights and its business cloud planning worth $1.55 billion. Yeah, so Workday definitely coming up to a buy zone here. Let's take a peek at some options and see what's what. Oh, and we got market opening right there. GDS, Twitter up 2%. Twilio, FFIV package, match down some, Fizz flat. All right, let's check out Workday. See if I can find some decent value in some Workday stock. 140, 28, 168. Not bad. 155 to break even would be a little aggressive. I don't have workday up here, I believe. Let's add workday. Huya down 12%. Good thing I didn't buy Huya. We got VIPs down, YY down. Ooh, these could be some gap and goes, guys. Could be some gap and goes. On the bull side, we've got GDS. We're going to be populating this window right here. All right. Sorry, I just muted the mic there. Can you guys hear that thing click? I've never asked that before. If you can hear it click. So we got GDS here gapping up after kind of what's up, Eli? Long time no see in the Real Stocks Power Hour, my friend. Well, something like that. 814. Did we actually? Is it after market? Before market. Okay, so what were earnings then? Anfi. Let's see what's moving. There's my BLSF. Okay, had earnings. Yep, still waiting for that thing to break out. I very much like, yeah, Hui did go fishing. No, it's okay, buddy. CLR potentially trying to break out there. Fang's so close to the breakout point that if it's up here, I'm half-ass interested. Post earnings, so that's good. Just need some momentum to get this thing going. Yeah, market doing pretty good here. ENTP out of a nice little, it's called a frozen rope pattern right there. Boom, breakout to the upside. Whiting Petroleum, had a rounded top turn. It kind of turned into this flat thing on the right hand side. So I'm not sure so much it's a rounded top anymore. There's a bit of a pressure here. It's going to break in one direction or another. I'm just not quite sure which. Here having a little bounce today. What did here do yesterday? Okay, had a little support day after breaking a few little trend lines there. Let's delete some of these. Broke the 10-day, still above the 50-day, so nothing really broken in here. Just kind of taking a rest, which is expected. It's had a huge run. Lumber liquidators. What up, Paul? BE up 2% after a big down day yesterday. I do remember that. That kind of led my board to the downside. That was a pretty big down day. 10%. It's a big down day, but it came and tested the high of the IPO. So this is how you deal with an IPO. So we've come up, we've started going down. This is your buy point now. That's how you deal with an IPO. And BE is Bloom Energy. If you guys, I did a synopsis about this a while ago. Not going to go into it again, but they are a very innovative power company. They have a product that the guy's patented. No one else can have the product. It's greatly successful. Google, Apple, all those guys have it at their companies. They've had now for about 10 years. So they've just gone public, it looks like a week or two ago. And so now you get to invest in Bloom Energy. You can't have one at your house, though, damn it. But waiting for that to happen for 10 years. I used to email them like, oh, it's coming. I'm like, you lying sack of shit. So Funko, remember we talked about Funko a while ago back here, Funko being very fun. And there's my BLFS. I'm loving this BLFS. Very, very good fundamentally, very good technically, and setting up here in what is a, let me go to the weekly on here to really look at that thing, man. Just boom, off to the races. Can it have more? It's possible, yeah. So if you look at the weekly, this thing hasn't even base. This is the second base, second stage base. You think this looks big now? Look at that, first stage base. This is not a base. This is all these are too small to be bases. This is a little bit abnormal for a high tide flag, but it has high tide flag tendencies, and BLFS does not have options. You suck. But yeah, definitely good action here in BLFS. This is a small cap company. I looked at them the other day. I don't remember my synopsis. BLFS. 95 relative strength. What's your market cap? Oh, 99 relative strength, as a matter of fact. Almost poking into new highs before it breaks out. Very bullish action. Where's your market cap? Okay, so ignore this number, $20.99. Okay, now to be quite frank with you, you see a lot of winners come from the 20. There seems to be a ceiling at about $24 to $26 in stocks coming down from these low levels. I'm not quite sure why. It has to do with, the people playing the small, the people playing the small stocks don't play over that range, and the people that buy the bigger stocks don't play under that range. There's kind of like a weird line in the sand for stocks, and it's about the $25 range, give or take. So we're coming up to that in BLSF. Now, good thing is it's in the NASDAQ. So it's already in the big boy index. That work is done. I don't know when that happened. Wonder if we can find out. Maybe it's always been in the NASDAQ. But usually NASDAQ deals in stocks that are over $1 or $2. Okay, so BioLab joins the Russell Microcap Index in June. So, yeah, I don't know when it joined the NASDAQ. It's got to be recently. I mean, it's got to be recently. But they're in the NASDAQ, so that's good. So that hurdle's out of the way. So they may be able to transition straight into big boy status. But the market cap, guys, only $300 million. This thing could triple to $60 and only be a $1 billion stock. So I'm not mad at that whatsoever. I'm actually take a legitimate stock position in this instead of just an options trade. So the base right here, let me go back to auto and BLSF. So down about 26%. It's a little deep for a flat base. A little deep. Euro USD, yeah, we'll take a peek. But 1, 2, 3, 4 weeks. Looking for a fifth week to put in a flat, at least a minimum of a flat base here, but it's a deep flat base. That would actually be abnormal. And I've got a trade alert here for BLFS. All right, so let's look at some other ones. ANFI. Oop, Hertz Rent-A-Car up 3% again today. Let's take that out of the weekly time frame and go to the daily. There you go. Okay. Looking pretty good. Looking similar to this, but slightly different price action. See if I've got Hertz on my radar still. It's on there, but that's an old Hertz on the spreadsheet or on the program. Hertz target is 40. All right, and could you be setting up here to break out? Absolutely in Hertz. This could be a setup to finally break out. It's shown some pretty bullish action over here. Had some good sell-offs. Bullish action on earnings. I'm not quite sure exactly what they like. Except this is basically a duopoly industry. Ooh, and here was once up, now is down 1.74%. So there you go. Welcome to trading in the morning. Doesn't quite say why, but Hertz could get going and fairly aggressively in the upcoming weeks. So I don't mind Hertz at all up here. ANFI-GDS, MTZ, that's not Manitowoc, is it? No, it's MTW. Euro USD, yeah, let's take a peek. Yep, tanking like a rock as the dollar, as the dollar remains strong. You're gonna get lots of tanking against the U.S. dollar. Pretty much everything as the dollar is this strong. The question is, you have a head and shoulders here. The question is, can it play out? And if it plays out, how do you make $1 million off of it? Because it's freaking Forex. Well, first of all, they're going to chop you out of your position in some way, shape, or form. Second of all, this takes us back down to these prior lows from a couple of years back. So let's go to the weekly, get a longer term time frame here. You can see that that's pretty low for euro dollar. And can it happen? Absolutely. Absolutely, it can happen if the dollar remains strong. What does that do to the U.S. economy? I don't know. I don't know. We kind of had a bear market around here in 2015, or not a bear market, but we kind of went sideways. It was technically a not a recession, correction. My goodness. So we had a correction actually right around this time frame until the dollar had more beef. But you know we were also in a bear market here, so it's kind of one of those things. It's hard to actually say what's going to make the stock market crack and pause or whatever you want to call it. Currencies could be one of them. Obviously, money rules the markets, and they rule. I mean, money rules everything. So, if you have a company highly invested in the euro, or even in the pound, you know, the pound's been coming down. So you can see here that guys, if you want to go to Europe, go to Europe. It's a great time to do it. I went to Europe when it was like $1.80 something. Oh no, it wasn't that bad. We went when it was here, $1.60 something, I think. Ethan was born in 2011. He's 2 years old. So yeah, right here about the $1.60s. Now it's $1.27. So much more bang for your buck, guys. Go to Europe if you're in the U.S. So yeah, you can see these markets. All these markets are in downtrends compared to the dollar. Dollar's very strong right now, unfortunately, and Hertz leading the market today so far. I don't mind Hertz one bit. And so my target for Hertz is about $40. I believe this is a measured move. So the question is that a reasonable measured move or not? 100%. Yeah, who knows if that's a reasonable measured move or not? But that's kind of what the chart kind of implies with this type of a situation. You can see we have a lot of overhead resistance. So not much in here though. Once we cross this high, there's not a whole lot of resistance here. There's a little bit right here, $36, but you could even get all the way up to $50 with relative certainty, I think. Not certainty, but without a whole lot of fanfare. Ooh, Triple D having another healthy day after a big breakout the other day. Tencent and Alibaba, you're gonna have to. Oh, I can probably type in Tencent. Yep, there it is. The worst. Gapping down below this wedge is not good. I would avoid that. And Baba also moving lower, looking like a lot of these Chinese stocks that were once favored have kind of been rolling over. You think they would start to get aggressively higher to the upside, but they're not. What you see here is tightening action. See how tight the price bars are together? Then it becomes what's called wide and loose. This is distribution. This is them selling the stock. Okay, so if you want to play it maybe for a bounce down here in the 170-ish level, you can see we've had kind of a floor here. How does one click do that? I don't understand. See, Thinkorswim has a few quirks. I'll just put it that way. So it's kind of a trend line here. You can see 1, 2, 3, 4, 5, maybe 6 touches over here coming up in Baba. But if you want to play a bounce as we get close towards this trend line, that's not going to be the end of the world. Hertz up 5%. Man, we're getting going in Hertz. Woo. I may actually take one of my positions up here in Hertz if it keeps this action up. It doesn't even have any volume yet. Actually, maybe that's a bad thing. Volume is not bad, actually. Not horrible. Not good. It's not horrible. It's fairly normal, but it's being very aggressive on the price side. Looks like we're 15 minutes in the day here, so not a whole lot of days gone past, but it's already been very aggressive. Already eclipsed these two highs. All right, there's a red bar. It's going to happen eventually. Second I get really interested in a stock this early in the morning, I know to be patient. That's one of my rules I talk to people about, is if you have a tendency, you need to learn to listen to yourself. And that's one time I listen to myself, is when I get a little too happy a little too soon in the day. Roku gapping up and having a little update today after yesterday, which was a red day. Not too bad though. Nice pause here before, looks like a failed breakout actually. This technically would be its breakout point. This is too low for a handle, or is it? Maybe a little too low for a handle. MTZ, Maztec. Okay, you can see wide and loose there. Not super interested in that. Man, love Funko. Did not take a position. The options were crazy if I remember, so I didn't take any positions there. BCC, ABC, TNA. TNA looking great. Look at that. Beautiful little bull flag. There you go. Beautiful little bull flag. If you guys haven't liked the video, please hit the like button. I know a lot of you have. A lot of you are from my my crypto channel, Real Crypto. That's why this is Real Stocks. I'm making a real brand, ladies and gentlemen. Everything I do will be real because, yeah, no one pays me to do ish. So you got right here, you've got TNA with a very nice little form bull flag there. This is triple the Russell 2000 is what this is. So going through the leaders, CLR coming up to meet its trend line here after earnings. Nothing too crazy there. Okay, FF Twilio holding up very nicely after its gap. And there's Fang once again, gracing the green part of my board. Docu, WGO. What are some of the others on our watch list? Let's go down into my watch list here. This is kind of my current watch list. We talked about BE a little bit ago, and Twilio's on it. PKG. I made a buy in PKG, I think up here, and so far it's rallied lower, but has failed to go lower. Volume declining. Probably will stop going lower and go up here in a little bit. So respecting this trend line here. Did gap down on me, but a little scared, a little nervous, but nothing too crazy. But just got to let it go, got to let it break before you sell it. And Match has been behaving very nicely after we watched this thing break on earnings the other day. Regeneron, finally a green day, you stupid stock. This thing pissed me off. I bought this right here. And yeah, look what happens. Thanks. After earnings, big gap up, little bull flag, very declining, very low volume green candle. Doji as well, thinking it may reverse up. No, not really. Just gaps down. Thanks, Regeneron. Thanks a lot. So, TMS, T-Mobile. This is one that we caught also in real time. Actually saw it first way down here and watched it go up. Coming up to a point where it could potentially break out again. And if you notice, this is one of those. This is a very long-term trend line here. So going back about a year, going back to June of last year, we've been in this little base. Twitter and stuff. Yeah, I'm kind of getting there right here through the watch list, Eli. Pretty much most of my positions, I think all my positions should be in this watch list right now. Let me go double check actually. I haven't looked at my portfolio in a couple of days. Here we go. I should have everything in here, but you never know. Yeah, portfolio hasn't moved a whole lot lately. Fizz, PKG, TTMI, Regeneron, Twitter, Cores. Is Cores up here? I do not have Cores in here. I have it up top, but I don't have it in here. What's Cores doing? There we go, up 0.49%. So we'll get there. Yeah, it looks like everything's in here. Here, which is down 4%. Ooh, I'm actually finally negative in here. I was positive for a long time. Fizz doing good, FFIV doing good, Core's doing good. Everything else breaking my heart. Very small position in TTMI. TMS is one that I should be more heavily involved with. Yeah, I even got Twitter on here. Okay, so we're on TMS. All right, so next up is Cores. Cores behaving very nicely after earnings, and then popping up and continuing higher. So Cores is doing good. Anticipate course to continue doing good. It's behaving very nicely. We'll see what happens, but these things can take a little while to go. The base wasn't as tight as I wanted it to be, but you know, it is what it is, and you get what you get, and you don't throw a fit. So Regeneron there, Timus we talked about. So Fizz behaving very nicely as well. Fizz had a long-term trend line. It broke to the upside, tested it here, flagged out here. Now we're starting to move out of the flag a little bit. So Generac Generator is doing pretty good. A little aggressive sell candle up here. I wasn't too happy about that. Other than that, it's been behaving fairly happily. 50-day moving average, we're still above that and still above the breakout point. So not a whole lot to do here in Generac. Just kind of have to wait it out, unfortunately, which usually doesn't work out well for options. Garmin. So cupping right here, very nicely formed cup, and maybe this is considered a handle right here off of this nice volume pop. But so far on the right side of this cup, a few good volume bars. I'd like a little more aggression here in terms of that. Supported by the 200-day moving average. If it breaks the 200-day, this thing's probably done. We have Match, which I do not hold a position in, doing very well after several days of moving upwards on very good volume. Now we're finally getting a little bit of a rest, so we'll see how this plays out over the next couple of days. We got Shutterstock here, which is one I'm very interested in, and this is a malformed trend line, maldrawn trend line. There's the, is that the proper trend line? Okay, let me zoom out. So that kind of looks like a pretty well-defined trend line. 1, 2, 3 touches right there. Kind of crossing above it is what it is. And then kind of off to the races. Man, why are all these trend lines way off? That's weird. Shutterstock behaving pretty nicely. You can see Shutterstock's been in a downtrend for a long time. Very long downtrend. Higher lows here. Lots of green volume recently. Not so, most of the red's pretty much gone. And so I think it's probably clear skies. Probably clear skies for Shutterstock. And so there's Shutterstock on the daily. And you got FFIV breaking out of this base here. And it's actually technically hasn't broken out yet. It is just kind of this I do have a position in. It's up a little bit. I think I bought it here. Yeah, this one moving out pretty good. It looks like Generac again. See if Twilio. So Twilio actually broke out from all-time highs. Here's the IPO. Here's all-time highs. Huge base. And then you can see just breaking out from that base. Probably could get going again. And then TTMI actually failing the breakout right there, coming in. Not super aggressively, but looks like it may try to fill this gap, which isn't going to do good things for it. Probably is not going to break out here. Probably is going to base for a while to come. And then you've got Twitter, which started out higher today and subsequently moved lower, obviously. FIVN doing pretty good there. Up here in the bull flag, off of a very beautiful earnings day, just a gap and go, and very nice. And then looks like here, coming back down into the lows, probably will continue lower, I would anticipate. Yeah, no more tight bases, Eli. I'm actually going to close out my here. I'm almost flat, so I'm just going to close it out. Start raising a little bit of cash in some of these names that aren't really moving very well. I think that's warranted, to be quite frank with you. Take a little bit of risk off the table, leave on what's working, and start to kind of liquidate what's not. Save what you can. So if you guys don't know, I trade primarily options in breakout stocks. And right now breakout stocks aren't doing so well, so it's been a hard go of this earnings season for me. Yeah, I'll probably have to be much more patient. Probably just throw much more into my default position. Regeneron. All right, 3D Systems, how are you doing? Doing pretty well. Doing pretty well. That looks really good. I like that buying action right there. Very high volume, staying consistent. Not bad at all. CLR up 1.4%. Waiting for some oil stocks to get going. None of the oil stocks have really started rallying yet. That's kind of been I think everyone's waiting for that. Maybe it won't happen. Who knows? All right, PKG. Come on, PKG. Oh yeah, of course I'm negative in PKG. I think I bought it on this up day. So okay, that makes sense. Yeah, I've got basically a straddle of alerts around PKG to let me know if it's being healthy or if it's going to break. And I'll probably ditch that position if one of those occurs. Excuse me. Yeah, so Justin, with NVIDIA, let's check out NVIDIA. I haven't looked at it in a while, actually. Volume very low here, which is actually pretty healthy. I don't mind it, but there's not much of a base to buy off of. Let me go to the weekly. It'll make things a little more easy to see. That freaking crazy run, 20 to 250. Hold on. All right, so there you go. So I mean, you can see just very, very low volume in NVIDIA. No one's really selling this thing up here, not yet, and just been in a crazy uptrend. Thanks, Evan. I appreciate that. Do a video explaining how you pick the stocks you're going to look at for the day ahead with screeners, etc. Yeah, I can talk about it a little bit. Probably should get going though. It's already the hour's up, and my kids are going to start waking up. It's pretty simple, to be quite frank with you. You know, I like Investors Business Daily. If you go to investors.com, yeah, I guess I can. Where's my other tool? I mean, I there's very few tools that I use. I use investors.com. Okay, they have very good everything. Investors.com is fantastic. If you want to spend $250 a year for some information, definitely I would recommend investors.com. FinViz is another great place for information. The problem is if you don't pay for their service, it's 15-minute delayed data. Not that that's a bad thing, but they don't have any data until 15 minutes after the market open. Okay, also keep in mind I'm not a day trader. Okay, that's not my style. Ooh, we looked at Nano yesterday. So I thought we did. Yeah, I'm not a day trader. I'm actually a swing trader. I try to take positions and swing for larger moves. So, oh, what the hell? We looked at the day before yesterday. And how did it... Oh, you know what? No, we looked at it yesterday. It must have rallied after when I took my damn kids to school. How did I miss that? Oh, yeah, it rallied late in the day. Shoot. I wasn't in front of the computer at that time. Son of a bitch. God damn it. I mean, guys, this is a textbook cup and handle. Just freaking textbook. And then, boom, there it goes. So it's up about 6.5%. A little too late to get involved. So do I know about bonds and currencies? I know a little bit about bonds, and I do know about currencies. I do know you don't spell currencies that way. I know that much. That's funny. Looks like NASDAQ a little down today, not much. Twitter breaking my heart there. But yeah, Nano, man, we were all over Nano yesterday. It broke late yesterday for some reason. There must have been some news that came out. Nope, not really. Not really any news at all. Just broke out without me. Uh, yeah, bonds may actually go into a bear market here. I've got, I think it's TNT is the bear bond ETF for the 20-year, I believe. No? It's in my big swath of stuff here. Ooh, who you down 15%. Man, good thing I decided not to gamble that one. Boots? Oh, I love Boots. Yep, holding up very nicely after its breakout. Yeah, holding very nice after this little gap that morning. Didn't have such a big day, but holding up very nicely up here. Really liking the look of Boots right here. And if I remember right, this is a very early stage base too. Yeah, so max it's a second stage base. One base here, another base here, and then kind of off to the races for Boots, if you will. Man, YY down 13%. VIPs, and a lot of these Chinese stocks are just down. Grub down 1.52%. Haven't looked at Grub in a while. Yeah, I need to have a better way of screening through these things. Tesla? Yeah, you know what? You believe in Tesla or you don't. I mean, and I don't think you. I don't really believe in trading Tesla. I think you can throw money in it and like really hold it for a while, but I don't think. Yeah, I don't think that you can. I think it's very hard to actively trade Tesla. I mean, it's just so crazy. It's so crazy. I mean, if Elon took this thing private, which it sounds like he may, he doesn't really put stuff out like that and not follow through. Um, if he does that, then it's going to take a lot of sexiness out of the market. Ooh, Restoration Hardware having a pullback day, down less than 1%. Paycom, what's Paycom doing? Oh, still holding up in that. Let's go to the weekly. Okay, there's your short stroke pattern IBD. How'd you miss that one, you piece of crap? They do weird stuff sometimes, man. They do weird stuff sometimes. Feelings on Facebook? You bought the dip. It's not doing well. You know what? I wouldn't. This isn't a gambling environment. I wholeheartedly believe that. Um, so you can. I mean, it had a nice little run up, but if you notice, the volume still remains. That means this trend is intact. Unfortunately, I think Facebook probably will end up lower. Um, I mean, that's my personal opinion. Is I would probably get rid of it now. That being said, um, I don't know if it's done going up. I mean, we may go up more in time. I don't know how long that is. I don't know what, Christian, what your time frame is for holding this thing. If you're willing to hold this thing for a year, then I think you may be okay. If you're looking for gains in the next week or two, I don't think it's happening. It all comes down to time frames, Christian, when you're asking for advice, really. Um, that's my general read on Facebook right now. Is that and probably over the next couple of weeks it's just going to drift lower again. The volume signature indicative that this move is intact. Okay, now Facebook has had mini gaps like this before. You can see here, move to the downside, volume was declining, and then the volume started to increase a little bit, and then we had a big gap up. You can't time these gaps up. Now this was on earnings obviously, but you can't time these. So if we get a big gap up, I'm sorry, but like right now it looks like we're definitely in a dangerous spot for Facebook. I think it's in a dangerous spot. Now, I don't think it's going to go down into like 120s. I'm not saying that either. I just don't think it's going to rally right back up in the next few weeks, maybe a month. Like I said, if you're holding this a year, we're going to have some other events, some other things are going to happen. Now, when October gets here, actually, that's not too far away. Wow, that's like a month. Really? Month and a half? Dang. Okay. So if you're willing to hold this 3 to 6 months, you may do pretty good. 175 is not a bad entry point. Right over this little consolidation here. So maybe if you want to give yourself a stop loss under here somewhere between the 170 and the 165 level, that would probably that's about 5%. That's not too bad, 5 or 6%. If you want to trade this, because keep in mind, if you want this to go up from 175 back to highs, that's a good 5 to 1 risk reward ratio if you think it's going to go back up towards the highs. But really, I think what's going to happen with Facebook and maybe Twitter as well, it's just going to do a bunch of weird crap that you can't analyze. It's just going to do a bunch of weird stuff, and then it'll probably calm back down again, and then it'll be ready for another rally. But I can't say that won't take a long time. Okay, stock markets, when they break like this, they have long life cycles, so I can't say Facebook won't base for a year. Okay, it's fully possible. We've had a huge run up in Facebook. If you go to the weekly chart, I mean, it's just been a massive run up. Look at that. We've gone from freaking $40, $45 up to $218. It's due a bigger base, and that's what you're seeing here. Maybe talk about wide and loose and narrow and tight action. This is wide and loose action. You want to avoid this. But like I said, we could base for a very long period of time before moving into highs again, as long as Facebook does good stuff. If Facebook does bad stuff, then obviously that's not going to work out very well. I agree, Evan. Evan basically said the social media companies are due to new technologies coming in. I agree to an extent. The problem with that is that there's something called entrenchment. Okay, I mean, it's not like MySpace was kind of entrenched until Facebook came along, and then Facebook is now pretty well entrenched. And they keep in mind they also own Instagram. So if Instagram gets big, Facebook owns it. So if the users move from Facebook to Instagram and they have the same success monetizing that platform, it'll be a neutral move to them. I think user and subscriber growth and the ability for them to monetize their platform is more important, I think, than something else coming in and blowing them out of the water. I think, actually, I've got a service that I want to start providing that doesn't directly compete with Facebook, but indirectly competes with Facebook, and I think that is a potential for them to lose some people, as people just hate the BS machine that Facebook has become, which it has become a BS machine. Then I think you can, as these little services come in and start to erode Facebook again, I think that may be something to keep an eye on. But the entrenchment factor of Facebook, and especially Twitter, there's nothing out there like Twitter, and there's nothing even close to coming close. So I don't think Twitter's really going anywhere. I think it's fairly well entrenched. Its action is garbage right now. In fact, I hold way too much Twitter after that earnings drop, to be real with you guys. Very uncomfortable amount of loss I took on that. And I broke a rule. One of my rules is to not hold over earnings, and I got overconfident, had a huge gain in Twitter, and lost all that gain and most of my principal. So there you go. There's that. But yeah, so I think Twitter's going to be good. I think in 2019, later 2018, you'll probably see new highs in Twitter. But going forward, I don't see a huge catalyst to taking this higher, unfortunately. But as they get better with doing their business, then I think Twitter will be fine too. Yeah, I agree, Eli. There's really no one out there, and again, it's the entrenchment factor. There's a lot of people that think Linux is a better operating system. Well, why is Windows so pervasive? Because it's been in computers since they began. Okay, everyone's comfortable with them. Everyone likes them, even though Linux is quote unquote better. Windows is still the predominant operating system, even though they charge $100 for it. You know what I mean? It's just entrenched. It's just entrenched. People don't like change. And when you kind of start to realize that, then you can start to see some of the staying powers of some of these companies. Linux people thinks Linux is better. I don't want to get in that argument, but I'm just using that as an example. There are competitors out there that are free. Linux is free, but no one uses Linux. No one develops. I don't know if you have Adobe Photoshop for Linux. If you did, maybe things would be a little bit different. But anyway, guys, I'm gonna get out of here. Yeah, that's about it, guys. Have a good day. I'll see you guys tomorrow. Take it easy. And yeah, be here at 6. Or if you guys want to be here at 6:30, let me know and I'll be here at 6:30. It kind of sucks sitting here with one person watching you for 25 minutes. All right, guys. See you later.